Resurgent India Knowledge Series presents Virtual Session on Evolving Landscape of Green Financing in India. Mr. Ashish Agrawal, Director, Resurgent India Limited. Chartered Accountant and Management Graduate Ashish Agrawal has a rich experience of more than 25 years in financial sector. He has an extensive knowledge in credit and investment banking, corporate finance, capital market operations, foreign exchange services, debt syndication, wealth management and financial advisory services. Ms. Swapna Gupta, Partner, Avana Capital. Swapna Gupta is a partner at Avana Climate and Sustainability Fund, leading investments into technology-led startups catalyzing climate solution and sustainability, and delivering exponential returns. Swapna has 13+ years of experience across investing, investment banking and corporate finance, in sectors including supply chains, Industry 4.0, mobility and agri-tech. Mr. Debaraj Banerjee, Senior Vice President, SIDBI Venture Capital Limited. Debaraj is an investment management and corporate development professional with 15 years of global experience and real-time engagements in energy, environment-conscious industrials, fees, and technology-focused and growth-oriented growth institutions. Debaraj is an MBA graduate from the Indian Institute of Management Bangalore, with a focus on finance and strategy. Mr. Vineet Agrawal, Director Investments, Antler. Vineet is an investment director at Antler. Apart from leading Antler's India investments, he also spends time with the portfolio companies specifically on fundraising, strategy and GTM. He's built a strong portfolio of 43 companies and counts the likes of Sequoia Capital, Prime Ventures, Kai Capital, Bloom, Stellaris and others are co-investors. Ms. Seema Chaturvedi, Founder, Sponsor and Managing Partner of Funds. Seema is Founder and Managing Partner of Achieving Women Equity, AWE, funds to invest in innovative enterprises which positively impact gender balance, by investing in women-owned, led, influenced companies in India, building on the investment thesis that investing in women businesses delivers both commercial returns and economic development impact. Mr. Shantanu Chaturvedi, AVP, Transition VC. Shantanu is an experienced innovator with a demonstrated history of working in the startup ecosystem. His core competencies lie in scaling early-stage ventures, technology development roadmap, facilitation, and innovation consulting. He is a strong technologist with vast experience in evaluating technologies from the startup perspective in various verticals, EV, renewables, IoT, agri-tech, and others. He is an expert in acquiring robust market-ready technologies from a concept level and scaling them in the market.
Yeah, good evening to all, and greeting from Resurgent India Limited. I would like to welcome to all of you in this webinar. We have great panelists, the veteran from the industry, who are here to discuss and to give you a lot of insights about the climate financing or green financing or ESG. So there are many names of this basically, which we'll discuss in detail. So first of all, I would like to thank you to the panelists for joining with us in this program, and they are committed to the sector actually. And I would like to welcome and thank you to the audience, also the people who have participated, who are joining us in this program from different sectors and different industries and from different geographies also. I hope that I'll be in a position to justify my position as moderator. When we'll complete the program, you'll have the more knowledge, whatever you have before that actually. So to basically interact with the the more and more out of it actually, which you are planning to, we are thinking to listen and understand actually. So friends, as you know that this climate financing or the green financing or the climate change, global warming, these are the words which we are listening every day, and everybody is concerned about it also. So that the government and the other stakeholders are very much concerned. And if you have seen in the recent past, the government of India has taken a lot of initiative. We have the presidential year of G20 2020 to 23, where there are a lot of discussions are on this climate related measures or the incentives also. So we are discussing on this topic today, and as you know that this program, which is basically only on the green financing. So the agenda will be basically we will discuss the role of financial institutions, policymakers, and the other stakeholders in the entire green financing or climate financing ecosystem, and offering clear exit options for the investors, because we have all the investors, leading investors who are here. So they want to invest, but they want the exit options also, that exit strategies also. Then the incentives to the investors, lenders, and the consumer from the government actually. So anything which is to be taken up to the next level, there is a need of some kind of incentives. Although I do not believe in the incentives, but to make it sustainable or to take it to the next level, I think it is required at this stage. And the lessons from the global best practices. So we have the fund manager who have the global funds also. So they will give you the global perspective also. And the need for comprehensive climate finance strategy. What should be the climate finance strategy of our country, and key challenges and their effective solutions basically. So that would be the agenda of the today's discussion, where we'll try to understand more and more from our panelists. And I have a small PPT which I just try to deliver here actually, or to present you, where you'll be in a better position to know more about the sectors. So as the topic, this evolving landscape of green financing in India. And if you see that we called it net zero also, so the net zero path basically. So if you see that a lot of research, a lot of studies have been done, where the EY has come out with the study that there is a requirement of at least or of something around 10 trillion US dollar, which is something around from the today contest, I think 800 lakh crore actually. And which is which if we see that this is something around the GDP of many countries actually, including this combining many countries GDP actually. So this is the research done by the EY, that this will be the requirement by 2070 in India for this meeting out the this net zero path by 2070. So it's a big number, looks very small, USD $10 trillion, but it will convert in the real number actually. This is really a big number actually. And then we have got some study from the World Bank also, where they have given basically where we want to reduce the emission intensity by 45% compared to 2005. We need something around $170 billion per annum actually. So this is again it's a big amount actually if you see. And then you see that we need to have the sustainable practices across multiple fronts, like energy transition, sustainability, and the eco-friendly agriculture, sustainable finance, and innovative technology. So the requirement is that the all stakeholders should come forward and then try to basically focus on these areas so that the sector or the objective can be achieved. Green economy, and if you see that in India, the policy initiatives, a lot of policy initiatives already been taken, and with the positive mindset, including the renewables, electric mobility, and circular economy. But we have found out some, I think, some areas where the urgency is there, where the commitment should come from the all stakeholders. I think the better collaboration amongst all the key multiple stakeholders is very, very important requirement. Because unless until all the stakeholders will not come forward on the same platform, or they'll not be having the collaboration, then it will be very difficult to meet out the objective actually, net zero path actually. and the new policies. Although we have the government has taken a lot of new policy initiatives, but there is a more requirement also, like carbon pricing and all. Then the technology breakthrough. So technology will play an important role in the overall ecosystem. So we have to have this carbon capture, this carbon trading, carbon capture, and the storage and the usage of. So these are AI basically, which will help us to deliver in a faster manner. Then the consumption, actually sustainable consumption is one of the important part actually, which we need to think of actually. So where the more use of EVs and the green steel, these are the some of the areas which need to be taken up fast actually. And other than that, the securing the late stage capital for startup venture. I've seen that many funds are investing in the startups at this stage, but the late stage startup investments are still required. So this is another we have to see that what are the challenges of this, and then we have to mitigate it. And then the corporations or the corporates should come forward for the CSR activities also, which will also help to meet out that objective. So the CSR or ESG kind of initiative should be taken, which the government has taken. We have seen very recently the SEBI had made it compulsory for 1,000 companies to disclose or to basically follow the BSSR guidelines for ESG disclosures. And the we have the fund, startup fund, SRI fund, and also I think there is a need of fundo fund for the climate financing actually, which will help to boost up this sector also. If we see the investments in the green financing till now, and what is the future ask or the understanding of the research agencies. So till now we see from 2015 to 2022, there was an investment of something around 7 lakh crore in the overall this green investment, which include power, transport, and hydrogen wise nothing actually. And then there is estimate that there is a requirement of something around 30 lakh crore, which is a huge amount for next 7 years actually, and these 3 areas actually. So the power is having the largest requirement actually, almost 24 lakh crore. Then the transport 3 lakh crore, and then the hydrogen actually. So to meet out this requirement, we have to have the different kind of instrument, financing instrument, which need to be used. If we see the equity investments in the sector actually, so the past year, if you see that there is investment of something around 4.7 billion USD in the different segments of the green financing, which include the energy transition, clean mobility, sustainable agriculture, waste and circularity, and then emerging sectors actually. And the major contribution has come from the BC and impact funds actually. Although we are getting a lot of climate focus fund which are dedicated, but their contribution was something around 10%. So this is the data which we have taken from research. And but we are seeing that over the years, the more investment will come from the dedicated climate focused fund actually. Then as we discussed that there is a requirement of 30 lakh crore next 7 years. And if you see that there is estimate that how it will come. So if you see this chart actually, the major requirement which will come, which will be from the NBFCs and the banks actually. So out of this overall requirement of the debt, something around 22 lakh crore, this 53% or 50% of this demand will come from the banks and NBFC, and rest will come from the different instruments actually. And then there will be contribution from the FDI and the ECB also. But still, so that the banks and NBFCs would be geared up, and they should have this kind of fund availability for investments or for taking the exposure in this sector actually. These are some of the latest development at a large scale. If you see, the ADB has committed something around 25 billion toward green growth in India in the next 5 years. So 25 billion is a big amount actually, if you see. And then this the green and green social sustainability and sustainability linked bonds. I think there is a market which is creating. So we call green and the yellow, blue So these kind of bond demand or the supply is also expanding. And uh, as per this some data, which is accounted something around 20 billion, 21 billion in the Indian debt market. And then basically, if you see the guidelines for banks and NBFC, so unless until we'll not have the green deposits or deposits dedicated to the sector, it will be very difficult to mobilize the fund for the investment in that sector actually in a dedicated manner. So RBI has come out with the guidelines for the these green deposits, which is a very good initiative by the our regulator. And then the many banks have coming forward to basically come out with the various schemes. So Yes Bank has come out with a scheme called Yes Kiran, which is mainly for the MSME sector for the green initiative actually. Then again, the World Bank has also come forward like ADB. They have also approved something around 1.5 billion in financing to accelerate India's development to low carbon energy actually. So these are some of the initiatives in the recent past where the organizations like World Bank, ADB, they have come forward and they have committed funds for India for green initiative actually. So this is good that the DFIs are also coming up and the Indian government is doing a lot of policy initiatives. So whatever the demand is there, which we have seen in the previous slides, I think it can be beat out, but depend on the many challenges and the other things also. So we have experts who will discuss about these aspects where how this demand will be meet out, how they are helping the sector, what are the areas they are covering, and how they are evaluating the proposals on this sector actually. So I would like to invite our experts. We have 5 panel speakers, and all are fund manager. They have the experience of raising fund, investing fund, and majorly in the climate sector actually. So that's our privilege that we have such veterans. So those are here to speak with you to give you the understanding. So we have Ms. Swapna Gupta. She is from Avana Capital or Avana Climate and Sustainability Fund. She has vast experience of more than 13 years in the investment space. And this Avana is known actually for the climate and sustainability investment. So I would like to invite Swapna for her deliberation on the topic, and we would like to understand from her that what are the emerging trends and innovations in green financing by PE and VC investors in India, and how they are shaping the sectors for future actually. And another question which I would like to ask from her, from your fund perspective, what are the performance indicators used to evaluate the companies in this industry? Also discuss the subsectors in this industry on the basis of your evaluation experience. And other than that, I think we would like to listen from her that what is the Avana basically, how you are helping the sector, what is your mandate and the strategy. So first of all, thank you, Swapna ji, for joining with us, and I would like to invite you for your deliberation. And over to you.
Thank you, Ashish, for having me and for this great panel. I think the more we talk climate and sustainability, the more capital we mobilize, which is great for the ecosystem. I will flip the order of your questions because I think it's important to set context of what we do at Avana and hence what do we see as the key trends, which is
Yeah.
how we are shaping most of our conversations today. So if you think about last 20 years of how India really has leapfrogged, and today, I guess any global conversation, if it's about startup ecosystem, India is a key component of that. Simply because digital rails were built in the country over the last 20 years, the JAM we know, the Jan Dhan, Aadhaar, mobile, or be it the fact that today 800 million plus people are doing everything possible in that small little device, really paved the way for today what we know as digital India. And if I take the same leap forward in terms of what are the next 20, 30, 40 years and the conversations which will shape the country as we know today, it's no brainer that with every great problem statement, a great opportunity arises. And if we think about the global narrative, and Europe, US, of course, have taken a lead there, and as everyone is working towards their 2050 net zero goals, we already know that these developed economies have already gotten to the place where they're saying, look, we have stopped burning coal, we are thinking about mitigation, and we are solving for climate by focusing on carbon alone and few other areas. Whereas if we think about India, India is a developing country. Climate change is real. Thankfully, now there are no more deniers at least. And with that, we know that next 30, 40 years narrative will be shaped around climate. We will have this artificial 2070 net zero target, which we need to run to. Probably we will get it faster and sooner because the world is changing every day. But as that happens, we also need to ensure that the country continues to develop. So the framework we have chosen at Avana is technology will be table stake because that's the only way to bring meaningful change in any sector. For us, climate is not necessarily a sector, but a very thematic approach of how various sectors will be impacted by climate in next few decades to come. And again, the lens really is we can't only think carbon, but we have to think about a land mass of our size, which has water on all three sides, has 20% of the world's most vulnerable population, which will continue to grow. And with that, what I mean is manufacturing, real estate, consumption, all key sectors will continue to bolster. We will not stop burning coal tomorrow. We will get to our net zero targets, but in that journey, how do we ensure we are getting closer to our climate targets? So, with that mitigation, adaptation, resilience lens, we have chosen four key, I would say three key sectors in the country today, which is more around energy transition, resource management, mobility, supply chain, and sustainable food systems and consumption. Ironically, they are 90% of India's emission and 70% of our GDP. So think of the scale that every small startup can create impact. It's going to be hugely meaningful, largely impactful, and large return opportunity. So we are all capitalists by nature, which is why we are called VCs. But also in that process of being VCs, we need to make returns, but we need to ensure what we are creating is scalable and sustainable. And that's the lens Savannah has taken. So key sectors to look after. Now going back to the key trends or narrative that we are seeing, we are part of, between me, my partner Anjali, and the rest of the team, all of us have been part of the industry for many decades, have seen really the startup ecosystem in the country shape, and also the ecosystem in the country shape the global narrative as well. If I think and dial back 20 years back, nobody would have thought India startup technology together in the same breath. But today, all of that is real and possible. Increasingly, we are seeing India building for the world, both product innovation and process innovation leading the charge from the country, and especially on climate. Again, the reason the charge on climate is being led by the country is because the most vulnerable population are here. Also, 20% of the world's population is this part of the world. And if I think about, again, not me, but if I think about all the large stalwarts whom people we follow, be it Bill Gates, Gary Singh, Warren Buffett, and all the narrative that we've been recently hearing, it's all about how next thousand large companies will be built in climate tech. So given India is a large part of the equation, it will be no exception that at least 20-30% of them should be built in this part of the country. Now, having said that, we have to think about what are the key areas where we will see the initial disruption followed by the other areas. While we have taken the broad lens of the three sectors, we know that few sectors will be amenable to disruption first and the later will follow soon. And that is basically the trajectory India has followed, right? If I think about clean tech 1.0 or whatever we call that now, solar was really the first push that we saw towards renewable and towards getting closer to our climate journey. We are getting closer. But what it really essentially got is a technology cost low. So today a unit of solar is cheaper than a unit of coal, which makes it more real, which makes it more amenable, which makes it more doable. But as we think about next 20, 30 years, the second wave really was EV. I think I go back 10 years back when people said we will build EV out of the country. I thought, really? I mean, being a technology investor, still I thought, really, can India really build EV? And the rest is history, right? Today, even a 2 year or 3 year old will know a green number plate from a non-green number plate. So the country is transforming and EV. And if you think about solar EV, a lot of it's actually been a lot of policy, regulatory, academia policy plus startup push. So all that is coming together. The few trends which I think India will definitely see is that as new construction continues to build, so for example, built environment, sustainable building materials will see a huge transformation. The second key area we think about is circular economy. Given we largely consumption driven economy, also huge economy, lot of push today we are already seeing around NPR guidelines. We're seeing policy regulatory push. So a lot of circular economy across different pockets are changing, and we will see a lot of startups emerge from that. The third key area which we're spending a lot of time again is around driven by again policy BRSR guidelines. So how the rest of the world has sent say their scope 3 emissions to our part of the world. So we need to solve for that. And as we are solving for that, there are no real monitoring platform. You have auditing tools, but no monitoring, tracking, reporting platform. So can India build those tools for rest of the world? So those are some of pocket of innovation, both process and product. I personally am very bullish and would love to see more startups working around, say, water, because again, India is largely agrarian society. Agriculture has 80% of water demand. Today, we don't pay for water or we pay very little, so we don't realize, but water table is depleting. So some innovation is going to happen there and large outcomes will again happen. Again, the other area is alternative material. For the longest time, I think plastic was the largest invention mankind had, and it has become the largest bane of mankind's existence. So there will be new materials which will emerge, which will take on, and which will build for the future. So those are some of the areas we are continuing to see. Would love to see more entrepreneurs enter those fields and would love to partner with them. We are early stage, we go in very early. So any and every entrepreneur who's thinking about how I can build a large disruptive business which could scale the lever and move the needle forward across these areas are what we are spending time on. I hope that answers your question, Ashish.
Yeah, thank you very much. I think you have very well covered the India perspective and the global perspective also. And then your suggestion is very, very important that we need a monitoring platform to be developed, which should serve India and the other part of the world also. So we should take the lead, because unless until the monitoring is not there, it's very difficult to measure the whatever the success is there of this, whatever the carbon zero path we want to go actually. And other than that, we told that you got excited with the water-related initiatives where we want to get the clean water and other water-related areas, and the alternative material, which is very, very important. So you're already giving the thought process that the one are looking to enter actually at global and Indian perspective. Thank you so much for your deliberation. Friend, you know the ladies first, so I would like to invite Seema Chaturvedi ji. Seema ji is the founder and sponsor of managing partner of AWE Funds. So, and she has 25 years of experience in the financial management, the investment. So, Seema ji, first of all, thank you very much for joining with us. And you are the senior most panelist here actually. So we are expecting a lot from you actually. So we would like to ask some question, but you're free to give what you want to cover. So there are two questions which are in my mind actually, which is which steps according to you need to be taken to attract institutional investors to participate in Indian green financing actually. That's the one very, very important question. What are the risks associated with green investments in India, keeping in view the current market scenarios, and how do they differ from the traditional investment risk actually? Because whenever we are talking, we are Resurgent India investment banker and merchant banker, we are interacting with a lot of stakeholders regularly. So there is still dilemma in the mind of the people that this is a sector which is evolving. So there are risks involved. We should not be the first comer and all. So we'd like to understand from you also and brief about your fund also. To you, and thank you very much.
Thank you so much again for inviting me to join this really amazing panel. Ashish, your questions are spot on. And I think the advantage of being the senior most, and I'll take that affectionately, is the fact that you've seen many economic cycles and to be able to compare trend lines and economic cycles is a very valuable lens. So you can compare what's real, what's going to stick around, what's just a passing fad, and what is sustainable. So with that lens, I will share with you just a little bit about off funds. Essentially at off funds, we are driven by the premise, which is now rooted in actual data, that the burden of the burden of climate change, unfortunately, is not gender neutral. And we take that to heart because as off funds, we want to drive equity. We want to use our equity to drive equity, and gender is a very key focal area for us. So we say we want to invest in innovation which will promote climate action and gender equity, because the two of them are very significantly linked. And our general sense is, in a resource-starved world, to achieve the SDG goals, where there's an estimated 28 trillion shortage, why don't we try to use the domino effect of knocking one big SDG in a manner that the other SDG goals are also met? So that's kind of the lens we use to evaluate investment opportunities. Broadly, we are focused on three important sectors: climate, health, and agri. And agri and climate are essentially very interlinked in that agri for us is a subset of climate, but it's also a standalone big enough sector to deserve its own importance in a manner that we can drive specific attention to it, because the world is going to be, as it grows to be a $10 billion planet in terms of the number of people, the need for food is going to be real. And that's where we are driving our focus on investing in companies that can prepare the planet for more sustainable access to food. So stepping back in terms of to your specific question on what are some of the new trends or what is required for sources of capital, I think, again, leveraging the benefit of economic cycles, I've seen this, the climate tech 1.0, climate tech 2.0, and whatever will ensue significantly after. A little history lesson, the 1.0 was driven largely by subsidies and largely by grants and the government's pushing. I've seen enough cycles, and there was a time when some of the most innovative solar PV companies, we've lived through all of some of them, the names don't even exist. Moser Bear was big into PV cell manufacturing back in the day, etc. That did not last because I think while the supply was being pushed by government incentives and subsidies and grants, the demand wasn't as forthcoming. And to make something sustainable, Econ 101, you want to have demand and supply, and demand pull is often a very strong motivator. So this time, what feels different is the fact that everybody is actually experiencing the negative impact of climate on a personal level. It's not a happy situation when you have to ride through floods in Delhi, for example, and you have to get to work or just stay at home. Missed productivity is becoming real because of climate action. So for this one time, people are actually willing to pay, and the consumer is willing to pay. And that is the big shift that is now making this climate tech funding much more sustainable. Because now you don't have to depend only on the limited resources that, quite honestly, any government, however large it might be, can curate or put together. Having said that, I strongly believe that the role of the government is to lead with example and have a model behavior in a manner that encourages private capital to come forth and own that space. Now, subsidies, grants only last that long, but if they can create incentives in a manner that crowds in capital, which could start with the public-private partnership, but crowds in capital, much like the government of India is doing by having dedicated fund of funds, that becomes a very strong underpinning for catalyzing later rounds of funding. Because as we all know, the cap table, the equity sliver is a very important sliver to have, on which then builds a very strong foundation, because that is risk capital. So some of the programs that are being promoted, if we even start with so the takeaway here is we have to promote entrepreneurial activity, because government action can only last that long. How do we promote entrepreneurial activity is by making cost of capital come down for an entrepreneur to come into a space in a manner that he is able to seek reward for the risk that the entrepreneur is seeking. So the slivers are still very much, the pockets are still very much the non-dilutive capital of grants, which can still form an underpinning, but then there are sources of blended finance that can then layer on such that we can stretch that rupee or stretch that dollar as need be, to be able to crowd in further commercial capital. So I'm a firm believer in wanting to leverage every little rupee, whether it's equity or debt, but then attract. And so you could have non-cash sources of funding, such as guarantees, which crowd in and give the commercial capital the comfort that their monies will not necessarily be lost, but gives them also comfort that they're coming in where the downside is protected, but they have the ride and the ability to go benefit from the upside. So those kind of instruments would be very beneficial in us collectively funding, as Swapna very beautifully outlined and you outlined in your presentation, the massive amount of funding that needs to go into making this a real proposition. The risks, really quickly, in interest of time and letting others talk, are real. We've seen a lot of capital evaporate. I will repeat this, I am bullish about this run because it is the consumer driving the acquisition of the climate tech assets. This is also where the risk can be mitigated by smart financing instruments, specifically blended finance, which contain the downside of investors, such that they become more interested and more ready and willing to participate on the cap tables of these entrepreneurial companies, which are spearheading all the climate tech initiatives. So I'll pause there in the interest of time. Happy to revisit more with more comments.
Thank you so much, Seemaji. I think you are very well covered and a lot of insights you have given. This regarding this fund for climate financing, reducing the cost of capital, blended finance. The guarantee is one of the new things which you have given actually, because it's not necessary that you give the fund, you can give the guarantees. So these are very, very, I think, which you have given, and you are very well covered also. And your confidence of the sector, I think it is very, very important. And you have, I think, shown this confidence to everybody. Still, the future is good actually. And thank you very much once again. And I'm sorry that I told that you're the senior most member, but you are senior most, but it didn't look like that actually. So don't take it.
No offense taken. It's always nice to be senior in something. So that's good. I'll attach it to intelligence.
Thanks a lot, actually.
And experience. And experience.
Thank
It's
you.
humility, not intelligence. They're very intelligent people on this panel.
No, you're right, actually. And you have played that role also, the senior most. The way you have given the insights, I think, are very, very important. Actually. Thank you so much once again. And, so friends, now we have so we have senior most member, then we have the youngest member also in our panel actually. So we have Mr. Shantanu Chaturbedi. He is with us from the AVP of Transition VC actually. So Shantanu, basically, I was talking to him. He said, "I'm not young actually. I'm looking young actually." So I don't know whether he's saying right or wrong actually, but truth he knows the truth actually. So he had good experience in the startups ecosystem and the EV and the renewable space actually. And this fund is, I think, he will give the idea that, or the understanding what the transition fund actually. And we have some questions from Shantanu. So they are related to basically this sector only. So based on your experience, how do you evaluate clean tech companies actually? That's one important question actually, because many promoters, founders are coming to us and they are saying that what we are doing basically how the investors are looking at actually. Then how they are evaluating which parameters are there, and they talk about the product innovation, sustainability, benefits to the society, etc. And the second question: what are the major sectors or industries in India that are currently benefiting from green financing? And what makes them attractive investment options actually. So different sectors in the green financing where people would like to understand which attracts the investment, and the basically how you evaluate these and brief about your fund. Over to you, Shantanu, and please carry forward.
Thank you, Ashish, for the opportunity to speak on this very prestigious platform, and thank you for those questions. A little background about us. I'm Shantanu. I'm from Transition Venture Capital, and we're a decarbonization focused fund. We're a sector focused fund where we look at startups in the domain of decarbonization that has anything directly or indirectly to do with reducing energy, reducing carbon footprint, reducing carbon emissions, or enhancing energy efficiency. So Transition VC is essentially focused on the transition. And what we're talking about is globally today, there are multiple large transitions happening across various sectors. So if you look at decarbonization, that is a transition happening from non-renewable energy sources to renewable energy sources. If you look at the automotive sector, there's a transition happening from petrol engine, diesel engine driven vehicles to electric vehicles in some shape or form. If you look at the semiconductor domain, it's a little less known, but there's a huge transition happening in the semiconductor domain, going from narrow bandgap devices to wide bandgap devices, and so on and so forth. There are multiple fundamental sectors, multiple fundamental technologies that are experiencing a transition today. When we talk about the net zero journey, when we talk about decarbonization, the world is already globally on an average hotter by 1 degree Celsius, and the Paris Agreement outlines that we want to stop it at 1.5 degrees Celsius. However, again, a little lesser known fact is in today's trajectory, we're all set to hit 3 degrees Celsius, which will lead to catastrophic changes in climate and weather, and a massive impact. I mean, it's very hard to even predict what the weather will look like, what the climate will look like, what the ecosystem will look like if we actually manage to hit 3 degrees Celsius. So it's an alarming journey as the globe that we're on right now. The technologies, if you look at it from a technology perspective, to hit net zero in 2030 and 2050 is today at a very, very immature stage. So if you need 100 technologies, only 25 of them are mature and deployable today. 75 of them, at least 75% of them, are at a very early, very immature stage of development. So a lot of goals have been outlined, a lot of NDCs have been outlined on how we're going to achieve net zero by 2050, but trajectory wise, it doesn't look like it today. So we're a fund that is focused on this transition. We're a fund focused on the innovation that happens in this transition. We're not at the today, we cannot pump in capital and deploy large projects and hope to become net zero. There has to be a certain amount of capital deployed to innovate on these technologies, develop these technologies, which will enhance energy efficiency primarily, which will make everything greener, everything better, everything faster, everything more efficient. And then large amount of debt capital can come in to actually deploy these at a larger scale. So what we believe is that there needs to be a lot more focus on the innovation agenda. There needs to be a lot more focus on the R&D agenda to actually develop technologies suitable for carbon capture, utilization and storage, for generation of green hydrogen, getting green hydrogen to be cheaper than $3, and multiples across. I mean, this net zero journey is not going to happen with technology that is active today, or technology that is mature today, technology that is available today. This net zero journey will happen by 75% of the technology which is today just at a lab scale. So we need to focus a little more on a technology innovation agenda which drives the net zero journey. When we talk about transition VC and how we evaluate clean tech startups and clean tech technologies, so again, our primary agenda, our primary thesis is one, the innovation scale. How innovative is the technology today? How new is it? Obviously, I'm not going to touch upon the standard sort of metrics that VCs look at, which is the market size, which is the competition, which is the team. What we internally look at, apart from all of these things, is the fundamental technology, the core technology. So a startup ends up doing a lot of things, developing a lot of things to actually sell their product to the market. But there is a core of the technology, there is a fundamental part of the technology which is innovative, which is defensible, which leads to long-term sustainability of that startup as a business. And that is what we look at, that is what we try to understand. What is the fundamental technology that is driving this startup here? What is the fundamental technology that will enable long-term defensibility, long-term sustainability? And then obviously, can that technology be coupled with intelligent capital, intelligent debt instruments, intelligent equity instruments, intelligent impact financing, and be deployed at a larger scale? Obviously, the premise being, does it solve a problem that is large enough? Does it address a problem that has a significant market size? Once we have all of these factors in place, then we sort of take the decision to invest in startups. Going forward, we see a lot of technologies coming up. I mean, if I start speaking about technologies, I think we'll have to organize a whole day session again. But broadly, in the technology area, there's a lot of transition happening. And I'd like to close off by saying one simple point. India today has to if India today has to become net zero, India has to start on the R&D agenda. Those days of where we import technology from various other countries and deploy them at a large scale, which has happened in solar, which has happened in wind today, where the technology is largely imported, that isn't going to work anymore. India has to be self-sufficient when it comes to development of the fundamental innovations, deploy those fundamental innovations at a large scale. All of that is happening in India. It is encouraging the amount of work that is happening in India, but it needs to happen much bigger, much larger, much faster. And that is what we focus on. I hope I have attempted to answer the question that you posed. Thank you so much for this opportunity.
Thank you. Thank you so much. You have very well covered all these questions also, and then your passion about technology can be seen with your deliberation. So then one good thing which you are told that the fundamental technology which can solve the larger problem actually, and it's sustainable also. So this is the message which you are giving to the audience actually and to the all stakeholders. And then the capital, basically capital to deploy and innovate actually. So we cannot away from that innovation or innovation capital is required and there is risk. So we should not be out of it. We should dirty our hand. We should involve and then we should see that how it will shape up actually, and that the larger debt will come later on. You're right actually. So thank you very much for your deliberations and giving us the lot of insights about the sector. So friends, now we have another panelist and he's also having very good experience and large experience and investments in many companies also, Mr. Puneet Agrawal. He's Director Investment of Antler. Antler, as he told, that is a global fund actually. So we would like to understand from him more about the global, basically investment which are happening in the other part of the world and how it is different from India and how the India should take up the same kind of pace also in the investment. And there are some questions which you like to just ask from him. This based on your prior experience in EV mobility sector. How do you see the space maturing in coming years, and what would be the success recipe for these players? That's the one question actually. And then another is what are the technological advancements happening in this sector, and how can you integrate technology in this sector? Although I think this has been taken up a little bit, you can cover up more. And then what need to be done to create a robust carbon pricing mechanism that can mobilize private sector investment towards the low carbon and sustainable projects actually. And Mr. Beneath has worked in Ola, so I think his experience will also help us to know that the EV sector, how it is shaping up in the country. So thank you, and over to you, Beneath.
Thank you, Ashish, for the kind introduction and for having me on. I'll quickly share some bit about Antler, so people, on the call joining the webinar know, something about us. We are a global venture capital fund with a presence in 25 countries across the world. Globally, we manage 26 different funds. In India, we invest out of 2 funds. One is primarily for the pre-seed stage, where we want to be the first institutional investor. And the second through a second fund, which is essentially a global vehicle which has a large allocation for India. Through that, we do Series A, Series Bs, larger checks, smaller, more concentrated bets. So that is what we do. In general, we are a sector agnostic fund, but we've identified 3-4 areas which are core, focus areas for us. Climate and electric mobility is one of them. Which is why I'm on this panel and very excited about climate and mobility and financing in general. My background, I lead investments for Antler in India, was an early team member here, pretty much helped set up a lot of what we do here today. Before this, I've spent time at Ola, which is where I pick up a lot of the electric mobility bit, was part of the Turbo acquisition, which now is the Ola Scooter. Before that, spent time at Goldman Sachs, did a lot of work on the natural resources side, and worked with companies who were setting up large lithium-ion battery manufacturing plants at that point. Did not know it will become such a large opportunity at this point, today, but very excited to have done all of that work with them. So that is, with that background of myself and Antler, I'll, jump into answer your questions in that specific order. On the EV side, I'll actually share a bit of a personal story to tell you what I feel about the sector and why am I, a big bull on the sector in some way. The first time I heard of an electric vehicle was about 15 years back when I wanted to buy my first two-wheeler as a kid, and my dad recommended I buy an electric scooter. At that time, there were some Chinese companies. There were only 2, 3 Chinese companies that were selling in India. They were basically importing knockdown kits, assembling in India, and selling it here. For my dad, it was a very good proposition because he essentially spent a little lesser as compared to a Activa, which I at that point in time wanted to buy. So his upfront cost was slightly lower in buying that electric vehicle, and he saved a lot of money in fuel. Now, the interesting thing to note was that an Activa costed 45,000 then. Today, it costs almost a lakh. That electric vehicle at that time costed about 35,000. Today, an electric mobility, which is comparable to an Activa, costs around the same as an Activa. And petrol at that time was 45. Today, it is almost 100. In some states, it is more than 100. So now, why did I share this? I shared this because at that time, I was very against it, primarily because it was not a product that I wanted to ride. A vehicle is always an aspirational purchase. For me, it was the first one I was ever buying. I did not want to ride a vehicle which the top speed of which was 25. It did not have a number plate. It did not make any noise. All the reasons why you want to buy a vehicle were not there. Switch to today, you have products which are actually faster than traditional ICE vehicles. You have products which are more refined. You have products which you want to associate yourself with and want to buy, right? Now, why did I say all of this? I think fundamentally 3 things have changed in the market since the first time we heard of an electric vehicle to today. One is product innovation. Better products are today available, which do a better job than some ICE vehicles or traditional vehicles that are available in the market, which make it an aspirational purchase for customers. That is one. Second is parity on the cost. The industry calls it TCO, total cost of operations. The cost of running an electric vehicle today is significantly cheaper than the cost of running an ICE vehicle. That is primarily because the cost of charging an electric vehicle is significantly cheaper than the cost of fuel for an ICE, a petrol or a diesel vehicle. Obviously, different form factors have a different TCO parity, but let's say two-wheelers are already almost at the same range, and in some cases better as compared to a like-for-like counterpart on the ICE side. Four-wheelers still need some time to get to TCO parity, but that time is not far away. And most of this cost, the upfront cost of buying a vehicle is primarily because of the cost of the battery, which is also going down significantly year on year. So I do believe that product innovation is already happening. There are vehicles which are at par or better already available in the market. In some cases, TCO is already at parity or better. In some other cases, it is already improving. So that is another big tailwind, which according to me is going to push EV adoption. Third tailwind, which we should not fully rely on, is obviously government focus and incentivization, tax benefits, so on and so forth, that have been offered for a transition from a traditional ICE vehicle to an electric vehicle. That has also created a big push. And obviously, last but not the least, the whole sense of impact, creating an impact, being sustainable in everything that you do, every product that you consume, I think has also had an important role. Now, the reason I mentioned this last is, fortunately or unfortunately, while an electric vehicle helps you reduce emissions in running, it may not be completely efficient in terms of manufacturing. Probably the electric mobility industry still needs to catch up on overall sustainability bit, which is why I mentioned it as the last point. But I'm pretty sure there is focus to get there. So to answer the first part of your question, those are the 3-4 big reasons why I think electric mobility, and I don't think it is a future anymore. I think it's a reality. Every time you go out on the road, you'll see at least 1 or 2 electric vehicles around you. That could be a two-wheeler, that could be a four-wheeler. Companies have already started working on electric tractors, on electric trucks. So I don't think it's a future. I think it's already a reality. The penetration is almost doubled in the last 1 year, though it is still at about 1% or so. I think it's just a matter of time when it becomes a large share of the market. Um, to your next question, I think I kind of given a couple of other panelists have also kind of addressed this. I'll combine the second and the third question also in the interest of time, and tell you a bit about what are some of the business models that we've seen in India and globally. I'll give specific Indian examples so that they are more relatable for people listening in. But we've seen interesting business models. I start with green financing specifically, which is actually the topic of the session. I am a big believer in verticalization in fintech. Horizontal fintechs have been around for some time. That is how it started. I do think there are some categories. For example, climate financing needs a very different solution. A horizontal solution does not work. And multiple reasons, we can go into details if required, but verticalization in fintech is a theme which I think there are some sectors, for example, climate, which need a vertical specific solution. And we've seen business models on the EV financing side. We've invested in one called Home Mobility. They unlock EV financing for EV buyers. So those are models that we've seen. We've seen models on solar financing, companies who are financing, helping you buy a solar panel, so on and so forth, or both on B2B, B2C side. We've also seen models that are helping finance, solar businesses that sell solar panels or manufacture solar panels. So those are some of the lending or financing business models that we've seen. Other than that, we've also seen alternate ownership models. Companies in India, like for example, Vidyut, Turno, Alt Mobility, all of these are creating a different way of owning a vehicle rather than just paying an upfront price and owning it and running it throughout the life. So that is another interesting business model that we've seen. Specifically on carbon emissions, we've actually seen a variety of models. There have been some B2C financing models, companies like Clients, for example, who are helping retail consumers offset their emissions by paying it by themselves. We've also seen companies like, for example, Step Change, who are on a mission to drive data back asset allocation or data back green financing models. That is also something that we've seen. Finally, in the interest of time, on the carbon credit side, we've seen companies building trading and exchanges. One interesting model that we've seen is blockchain-based carbon financing platforms or offset supply platforms. For example, there's a global company called ClimaDAO, who's a decentralized organization that brings in supply of carbon offsets, and that increases transparency, and then people can acquire assets from them, so on and so forth. So those are some of the interesting ones. I know we are almost out of time, so I'll give it back to you, Ashish. I'm happy to answer any questions if required.
Thank you, Vineet. Thank you very much. So nice of you for giving the insights about your previous experience also, and buying the vehicle at the young age, which is running for 25 kilometers basically. So speedy 25 kilometers at the young age, you want to fly actually rather than so. It will be, I think, a different experience also. But father is father, you can't. But you are realizing that he was visionary actually. They thought of this thing actually at that time actually. So
you were the first one who's told me this on this story. So thank you so much for saying that. My father does not want me to buy an electric car anymore because now he thinks it's too fast. So the narrative has changed. It's better for me, but probably not for him.
But that time he was young. Now he is old like you are young actually. You are more matured actually. So he may be thinking differently actually. He's now thinking more of other things actually. So great. I think you have given a lot of insights about the subsectors and where the interest is there of the investors like you and all. So thank you once again. Friends, we have very important person with us, Mr. Devraj Banerjee, and he's part of the SIDBI Venture for Capital Fund. He's a fund manager. And you know that when we are talking about the sustainability or climate financing, green financing, and all these things, it will not be complete without the DFI involvement actually. So we have a SIDBI Venture Fund, which is a DFI institution and the largest institution of the country in the DFI segment. And they are doing a lot actually. You will see that hats off to them actually. They are taking the risk at the initial stage. Initially, they have invested a lot of money in the microfinance sector, the small villages they have funded to the NBFC and other to fund to the women, small borrowers in the villages. And it has taken a very, very good actually. You see the microfinance industry, how it has evolved. So like this, the SIDBI is also doing a lot on the EV side and the climate funding side. So Devraji is there, and I think it's very important to listen him actually. So Devraji, first of all, thank you very much being here with us and sparing time for us actually. And he has vast experience of internationally and domestically of investing and raising fund also in various sectors and the various industries also. So Devrajji, we would like to ask some questions from you, which are basically like what role do development financial institutions need to play in the de-risking climate investments and unlocking capital flows towards sustainable projects in India. So the role of DFI in the sustainable investments, and in what way the government can incentivize the financial institutions to further penetrate the investment and financing to this sector. And the third one, which is also very important, how can India leverage its unique position as a global leader in solar energy adoption to attract foreign investment and technology in the renewable energy sectors. So thank you very much, and over to you, sir, for your presentation. And I'd like to request to the audience also keep the questions ready. Whatever you want to ask, we'll try to take as many as questions possible. Thank you, sir.
Thank you for having me jump into right into these questions. So I believe the way we look at it is that there are three basic sectors where deployment of capital has to happen to encourage green financing. And that's one sector is energy efficiency, the other part is clean transportation, and third is clean energy. So if you were to look at these three sectors, energy efficiency is a sector where you could see there's a lot of participation with private capital, both in terms of debt and equity. In clean transportation, it is, however, the prerogative of the government and the state functionaries, where we are coming in big time to actually create those systems or the ecosystems by virtue of which clean transportation can be propagated. The third part is clean energy. And I believe that in this sector, we can clearly see that the public and private participation is almost at the same level. But if you were to look at the numbers, we say that we currently are actually putting in money to the level of 1/4 of what is actually required, right? I believe that this number also is a much smaller number. What I clearly understand is that the World Bank, the way they have seen the numbers, they have seen it in terms of added capacities, but they have not actually looked at plant load factors of solar and wind farms, which ideally in India is around 20%, 25%. So if you were to look at that, then we are way behind the numbers that we are chasing. Second point is that India today consumes around 225 million tons of oil annually. So if you convert that into energy, it is like almost around, in terms of power, if I were to look at it, it's around 200, 300 gigawatt. So now there are two prone things that we have to look at. One is the fact that the demand will continue to rise because per capita energy consumption in India is about 1/3 when compared to that of developed markets. So it will obviously increase. The second part is that we are encouraging EV to come in big time. So if that were to also look at coming, contributing to 50% of entire mobility of the country. So the entire requirement in terms of green, in terms of renewable energy is going to be much, much more than the numbers that we have presented. And if that is the case, then this 170 billion capital requirement annually is way, way small than what we should be targeting. And in this case, we believe that if you look at all those three sectors that I informed you about, that is energy efficiency, clean transportation, and clean energy, I think that in all of them, domestic fund flow is major. Foreign fund flow is less. And this is where I believe that we have to solve a major problem. Because as we know that fund capacities in India is shallow, we still depend on foreign fund inflow. And that is really required to actually speed up the entire process. Now, if we were to again look at how we could do that as a DFI, we are basically looking at actually, through our own balance sheet, clearly demonstrate a way by virtue which we could, incentivize all the four basic players in this entire ecosystem. That is, one is about enablers. Enablers are basically policy-making people, etc. Then there are deployers, the third off-takers, and then finally the users. we have to incentivize all of them to actually adopt green. And for one more factor that we also can definitely look at is that India, I don't believe, is at the point where we really are appreciating green energy because we have started understanding the concept. We are doing it right now because we are insecure. We are insecure in terms of stability and in terms of energy. So we need to have those inputs coming in. And second part is that per capita income needs to go beyond $4,000. And I think at that point in time is where the real population will start understanding the real essence of what is green. So looking at all of this, our interventions are as follows. We are trying to talk to every other state and government agencies to understand how we could enable through policies, etc. Second part is, of course, from our own balance sheet, we are devising strategies through which we could initiate participation in this green financing. I think public financing has to play a major role in this because project financing is somewhere we need government and state functioning participation. DFIs will also come in this case, but also in the fact that when we need to drive home, and as you mentioned, the MFI program was driven by SIDBI. Similarly, in this nature, adoption of green financing will have to be again driven as well through us, and we are aware of it, and that is how we are trying to do. There is another aspect which is very clearly important, is the part of climate adaptation, and this is where I think the DFI has to play a major role. And what we are trying to do is, since we have serviced so much of MSME, we are trying to create a program by virtue of which we could inform them about how this impacts them both commercially as well as sustainably. And this is going to be driven as a program from SIDBI. Now, where I operate is the fact that I operate in the venture capital space, and where we are looking at deploying capital is we look at it as climate resilient technology or climate resilient agri-tech is where we are actually trying to come in through our venture capital arm. We currently are looking at, and these points were already raised, but we, at the cost of sounding repetitive, we're just trying to, look at technologies, look at the way that we could lessen the burden on climate. And if you could really take a leaf out of any book, it would be the steel sector. And I believe that at that point, when we were all talking about carbon neutrality and all, everybody could understand that steel sector was one of the major drivers of consumption of carbon, etc. So what we started calling as green steel is basically lessening the amount of carbon. In a similar concept, we are also trying to see what can be implemented in the technology sector. Mind you that there is a new devil amongst us, that is AI, and there is requirement of quantum computing. And today, AI and quantum computing is going to actually also consume a lot of energy in both, terms of power and water. And that again has to be also looked at sustainably. So we are driving this as a thesis of a fund as well, and wherein we are looking to incentivize or look at startups that are actually adopting these thought processes earlier in the life cycles. But as you mentioned, it is very clear that as a DFI, we will have to drive it at all the levels, be it at policy or at different fund structures or different debt structures. And that is what we are trying to do now.
Thank you, Devaraji. Thank you very much for giving the insights about the your fund also and the global and Indian perspective from the DFI point of view. And it will definitely help us or the audience also to connect with you and get the guidance for future actually. So friends, I think we have already completed the deliberation from the panelists, and the time is there for the questions from the participants. Although we have already crossed the time limit of the agenda, whatever we have given the program, but we'll take one or two questions which has been raised by the people who have participated. So one question is very, I think, relevant question, or the question which is related to the decarbonizing of the village. Actually, somebody has asked that he want to decarbonize his village. So how he can get the funding for that actually? So although I think the vision is very clear that people are thinking at the rural or at this level I think awareness is there actually. People need a means basically. So if anybody can cover this question, it'll be great actually with Devraji also. So it will be in the form of grant or maybe CSR funds, or there can be fund like RCDB can come forward and give money for this kind of investments or this kind of requirement. That is one question. And then there is another question uh, which has come from some other participant. So he is asking that please guide me on how to raise green bond or the climate bond for green project like CBG production and the solar power generations. So these two questions we'll take now, and I'll request to panelists if anybody would like to take this question. It will be helpful actually.
For the first part, I believe that the best way to go ahead with this, and this is a very good concept, I think they should be developed as a project concept and please demonstrated to corporates, because I think if you want to really create an impact very quickly, you will have to actually prove that this works. So as a proof of concept, you will have to submit it to some of the large corporates, and through the CSR activities, you might have to demonstrate that you could do it. Once, when you could demonstrate it and then you could showcase it as a case study, then you could start reaching out to other government agencies, etc., where these concepts can be looked at in terms of how you have developed it, and then whether this could be scaled, etc., or not. And I think that both state functionaries as and DFIs would be keen to look at such concepts and support in a particular way. But I think at the first go, you will have to demonstrate that, and I believe a CSR route or grant route would be a better way to do it. Regarding the second one, the green bond issuance, I believe, Singapore has been a very strong, ecosystem for sustainability-linked bonds, etc. So I am not sure about what size or scale are you targeting, etc. But if this is of substantial size, my advice would be to definitely talk to investment bankers who have had or who have this kind of exposure already to foreign markets, because there is vibrancy in the Singapore markets on sustainability linked bonds. In India, I think the concept of sustainability linked bonds is happening now, but it'll take time, still take time to really get become a part of the structure. And there will be a concept of covered bonds coming in, because that's how covered bonds played a big role in renewable space in US. But if it is sizable, I would advise you to go to offshore, places where you could be funded quite well.
Thank you, Devraji. I think we have covered very well actually. So friends, now we have already overshoot the time limit, so I'll not take much of the time of the panelists and the participants also. I would like to close the session here where we have, I think, very good deliberation from the panel point of view, and a lot of insights have been given to us also that how we can penetrate the climate financing, what are the challenges, what are the opportunities. And one thing has come out that the market is huge actually. The demand will be huge actually. Who will meet out and how it will meet out? This can be deliberated. Technology will play the important role. As somebody has told that 75% technology and 25% other things actually. If the technology will lead, I think the things can happen fast actually. And the cost of funding is one of the aspects which need to be taken up in the mind actually, and the risk associated in at the initial stage. So I've seen the confidence of the fund managers who are here actually. They have, I think, a huge confidence to invest and to take the risk at the innovative technologies, and they believe that these technologies will be commercialized. Then they will basically be sustainable also, and they will help to grow the sector also, and then they can give the exit to the investors or their LPs, whatever the commitments they have made actually. So overall, I believe that the discussion is very fruitful, and I believe the participant must have got the lot of insights today. In spite of it, if you have any question, anything, you can write to us. We'll try to take up with this panel later on, and we'll reply to you also. And you can directly approach to them. And as Resurgent India, their objective is to basically create awareness and to bring all the stakeholders at one place and discuss that how this can be done also. And I believe that we are successful in that endeavor. And as you know that we are a sector agnostic investment bank and merchant bank. So we are focusing on the green financing in a big way. So anybody want to understand more and they have any requirement, let us know. we'll be happy to help you. So I would like to thank you once again to all the panel for joining with us and spending their time, and joined from the different part of the country and the other part of the world also. And I would like to thank you to the Resurgent team who helped us in this organizing this webinar. So Rohan, Devesh, Ojas, and Nikhil and the other team members, they have worked hard actually to make it successful. I would like to thank you once again to all of you, and we'll end the session here. Thank you once again. Thank you very much. Thank you, everybody.